everyone, we are back for your monthly real estate update, and it has certainly been a month of a whole year I should say, of highs and lows in terms of interest rates and prices in the inverse. Here locally, we've certainly seen a slowdown in sales, we've seen price reductions, and ultimately we've seen more negotiable sellers and builders. Prices have roughly fallen, this is from Zillow Group, they've fallen roughly 3% in the past 6 months, which is kind of what we expected in the area, but they are up 9% year over year, so that's always a good thing. The expectation was that in some markets at the high end, you'd have a drop in prices from roughly 2 to 4%. Again, it was expected. We had such a crazy boom out here in the Austin area that it's not totally a shocker. But basically what that means is that we've kind of come to the bottom of the expectation. We're there down where we expected it would fall to, which is good news. And it does seem as though we are, at least with boots on the ground, it does feel like we have hit that level. We're not seeing a ton of crazy price reductions anymore. Things are kind of staying steady. They're just selling a little bit slower. So yeah, it looks like we may be close to the bottom, which is obviously great news.
Yep, and thankfully rates have fallen just a smidge over the past week, so it looks like they may hold steady for a while, which should allow everybody a little bit of breathing room and give us a little more certainty to the market. Technically, we still are in a seller's market, but practically, boots on the ground, it does feel more like a buyer's market.
Yeah.
So it's important to keep in mind that no matter what the market is doing, we typically have roughly 10% of households move each year. So regardless of whether the market is up or down, people have to move for a myriad of reasons and thus buy or sell homes. If you're selling a home, staging, prepping, and correct prices are critical. If you're a buyer, you have time to be a little picky. You have some creative financing options available, and if you have the ability to get a lot of your usual closing costs covered by the lender or the seller. And I said creative because we had this off-camera conversation that lasted about 10 minutes with Alex because he wanted examples of creative financing. So Zach is going to touch on that.
I can give you a couple examples, Alex, just to help you out, you and our viewers.
Just to help you out, Alex.
Yeah, this is for you mostly. But so basically, you've got a couple different options. Big one that we're seeing more than anything is interest rate buy downs and closing costs. So typically when you're purchasing a home, you're looking at 2 to 3% closing costs. That doesn't include your down payment. So oftentimes you're looking at $10, $20, $30,000 that you have to bring out of pocket. I was giving them an example of a client that we just got under contract 2-3 days ago. The builder actually reduced the price down to like that market, the new market basically. So they got a good deal there. We were able to further negotiate an extra $20K off because the builders are very negotiable and they're holding way too much inventory. So they want to get rid of as much as possible. And so they're cutting great deals. But in addition to that, their closing cost was roughly $32,000. We got from the builders, we've got roughly $22,000 in closing costs coming back, and they're going to tack on like an extra $5,000. So these buyers are only bringing $5,000 out of pocket. Yeah, that's a creative finance solution that has not been available in years. So that's very cool. Another really fun one that isn't as often used, but I know in the investor world we love it, is seller financing. So that's where, let's say you have a $300,000 property. You can take that home and instead of selling it, instead of the seller saying, hey, I want $300,000 cash right now, what they can do is they can offer to seller finance that property to the buyer. And so they act as the bank. So instead of, they basically will give them the house in return for a $300,000 note. So this is really cool because you don't have to go through traditional application processes for mortgages. Typically the seller will beat the market rate. So if market rates are 7% right now, the seller can get that down to 5-6%, something that's more reasonable. It works for the seller because now they have a note. So for the next 5-10 years, they're going to be collecting a mortgage payment, which is awesome. It's just income. You're basically you're turning your house into a asset that pays you every single month. And then it's also a good deal.
The seller holds the note.
Yeah, absolutely. And so when eventually the buyer goes and refinances or sells that house, then you get paid out at that point the lump sum. So you still get all that $300K, but in the meantime, you're making basically an interest on it for the entirety of that, an interest and a principal payment on that every single month. So it can be very cool. It can go from having a house that doesn't want to sell to all of a sudden you have a house that's paying you $1,800 a month. So very cool little strategy there. And again, it just works for everybody. The seller gets to get rid of their house, but they also get to get a monthly payment, and then they also have the promise of a huge chunk of change when the notes due. And then the buyer is going to get a deal at a better financing terms than they'd be able to get from the bank right now. So it works for everybody. Those are some creative financing solutions. Again, those were not common over the past several years, but right now there's something that is much more negotiable. Sellers are much more open to these kinds of opportunities.
And that's where a great real estate agent can help you, because we're the ones that are looking at the MLS and we're looking for those seller finance options.
And we can ask around too.
Yep.
It's always something we can ask. So
Good stuff, yeah.
Mhm.
Here's an interesting fact though. Right now, the generation that's most active in the real estate market is millennials. They make up roughly 45% of the current buyer pool. It's finally our
we
time.
made it, dude. We made it. We're rich.
And it all comes down to
You're
purchasing
welcome.
power.
Yeah, thanks. Yeah. We did.
While there's no denying the higher mortgage rates are making it challenging to
Sure.
afford a home today, many millennials are still eager and able to buy homes, whether it's their first home or if they're moving up. That's large in part because of the value they place on education. A recent article from First American says millennials may be the most educated generation in our nation's history. Because of that, they tend to earn higher wages, and that translates to greater home buying power. Odetta Kushi, Deputy Chief Economist at First American, said this: in 2020, millennials with a bachelor's degree had a median household income of over $100,000, while those with at least a graduate degree had a median household income of over $120,000. Compared to those income levels with the median household income of millennials with just a high school degree or some college of $60,000, and the earning power benefits of higher education are undeniable. Millennials' pursuit of higher education is good news for the housing market because education is the key to unlock both greater earning power and, in turn, home ownership.
Okay, wait, stop. Unless your
Oh,
child got a
Don't go
degree
there. Don't go there.
in literature.
She's gonna go there. See, here's the thing. Linda has a son that has a degree in literature, so she's making a dig at them. However, we still love our readers. So if you're thinking about buying a home, we don't care where your degree came from, or even if you have one for that matter.
Or whether or not you're working as a barista in Starbucks with your literature degree.
She's just again taking digs at. It's a very touchy subject for Linda. So that's all. Don't let it get to you. But no. So here's the thing. Ultimately, is that people buy homes based on price, and not based on price. Sorry, based on affordability, monthly mortgage payments. So prices can go up and down. You know, if I have a price of a home for $1 million, but I'm only paying $1 a month, I can afford it. So it really comes down to affordability, not pricing. And quite frankly, the millennials right now have a ton of purchasing power. They have the ability to cover these monthly notes, even at the interest rates. And not only that, but what I think we're seeing here is that millennials have a pretty good financial education, just because we've grown up with a lot of financial education via social media, really. But they recognize that right now is a good time to buy. When you're in a recession, that's the best time to buy. That's where you make all the money. And I think that they're realizing that, and they're trying to dust off their portfolios and make it happen. So, yeah, and again, the bottom line is that they're well positioned, right? They have the purchase power, and they have the desire to purchase a home and to start building that wealth right now. So.
Again, you're welcome.
Yeah, I appreciate it. And here's another fun thing. If you're a seller, because they're making up such a huge portion of the market right now, millennials, just know that you can, that's how you want to probably position your home, is something that's going to appeal to millennials. Better outdoor spaces, home offices, things like that. They make a big
Yoga
difference.
rooms,
Yeah.
meditation rooms, all
Yeah.
that.
TikTok
Rooms-
studios, all kinds of fun stuff. So,
I think that's more Gen Z, but no, yeah.
Yeah. Close enough.
For sure.
Yeah. We brainstorm at this table quite often, and it does seem like now is the opportune time to buy a home.
Agreed. Yeah.
And could we see a slight pullback in home values? Sure, but it seems like that's kind of already run its course, and we're at the new norm. One thing we're not expecting, though, is a crash. This is not 2008 by any stretch of the imagination. And millennials, being one of the largest generations alive today, there are a lot of potential buyers who have been waiting for this moment.
Yeah, in fact, as a quick caveat, I don't mean to interrupt you, but Austin, millennials make up 31% of the Austin metro statistic area. So there's a ton of millennials in the Austin market, and they're buying at above that rate. So 45% of homes being sold right now, or 40 or whatever it was in here, they're are millennial buyers, and we have a huge swath of millennials here in the Austin area. So it's definitely it's the marketplace for them, quite frankly.
Yeah, really what we're trying to do here is keep this market in perspective. And the majority of pundits say in 2023, they're expecting it to be a recessionary year that should start to rebound towards the end of the year. So over the next 12 months, you can expect to see rising inventory, rising rates, and tempered demand for housing, which ultimately puts the ball in the hands of the buyer.
And just remember that housing is one of the first industries to recover from a recession. So towards the end of the year, you can start to expect a gradual increase in demand and a more level market. With that in mind, I would encourage you to start your house hunt sooner rather than later. When we're not sure when this recession will end, nobody has a crystal ball here, it's probably going to be towards the end of next year. So if you're currently in a lease that's about to expire, or you've been thinking about buying, now is the time to do it while the market can offer you some excellent terms. These anomalies aren't going to stick around forever. All these buyer incentives, all these builders offering these great deals, seller financing, that's not going to be around forever. So now is the time to get your home.
Yeah, I've been in the business for 7 years, and this is the first time that we've seen these kinds of opportunities for buyers. This is not the norm. And so take advantage while you can, and just expect that it's not going to last forever.
Yeah. And I heard a great quote the other day. I can't remember who said it, but it went something like this: the financial decisions and investments that you make over the next 18 months will determine your wealth in 2027.
Very true.
Ooh.
Yeah, recessions are where people make a lot of money. I mean, times seem scary. Good. That actually means that there's less competition for those good opportunities out there. I've spent a lot of time with real estate investors, both locally and nationally, and they've been saying the same thing for years and years. Man, I cannot wait for a recession. And the reason is that they know that now is the time to strike. When there's a recession, you have a lot of people pulling back. You have sellers that are panicked and willing to cut you better deals. It makes for the opportune moment to pick up properties at a discount with excellent financial terms that, again, over the next 5-6 years it's gonna pop at that point. So everything's at a discount. Whether you're buying real estate or stocks, now is the time to buy. And to continue to buy for the next 18 months. So.
Yeah, but even if you're not an investor, the fact is you have to live somewhere, and you're going to pay for a house no matter what. Either you're paying off your landlord's house or you're paying off your own. So in 2027,
because they're living in their garage or their basement.
right? But if you're paying rent to them, then eventually that's going to trickle down to you. Hopefully, you're going to inherit your own rent payment. I don't know, maybe it works like that.
Well, the key is to make sure that you're the author of the will for your parents. That's a biggie.
Nice.
I also highly recommend taking out large life insurance policies on basically anybody in your family. May as well. It could pay off, probably will. Yeah.
It's just so wrong.
So when 2027 comes around, or maybe even 2025,
Mm-hmm.
the question is, how much equity will you have created? And the answer is, around tens of thousands of dollars. The other question is, did you create that equity for yourself or for someone else?
Right, you're building someone's equity. I mean, I'm sitting in real estate right now and you're watching from some piece of real estate. Someone's making money off of that, and someone is going to build their net worth based on us being alive and needing to live somewhere. So it may as well be you, ultimately.
Yeah, and here's some more interesting news for a buyer. Rates have actually dropped over the past week.
Absolutely. Yeah, just a tad, not a crazy amount, but you can see over the past week they're down about 10 basis points, which is roughly 0.1%, sorry, so not a ton. But what it does show is that mortgage rates are starting to stagnate, and the reason is that mortgage companies are, they don't always follow along directly with what the Fed is doing. But the fact is that mortgage companies have been having to lay off a ton of people, and they're closing up shop because there's just not enough deals being done for them to stay in business or to at least have the size of the business that they had over the previous years. So we've seen and so basically what they're doing is trying to stall their rates out as best they can. We've seen over the past year that the Feds have raised rates 5 times, which is a freaking ridiculous amount of times to raise rates. But ultimately, every 1% increase that you're looking at, depending on the price of the home, is going to cost you $200, $300, $400, maybe even $500 more a month. Again, depending on the price of the home, a month. Yeah. So it really is an astronomical climb in affordability if you as those rates increase. So to see them stall out like this is definitely a good sign. This is why we're saying we're seeing the bottom as far as pricing goes. We're not seeing the crazy price reductions nearly as much anymore. It seems like they've leveled out. And in addition to that, we're seeing rates stall. We don't know how long those rates are going to stall, so it is an opportune moment right now to get in. They're definitely not going to drop too much, but we are seeing that little holding pattern, which is great news.
And you're taking a risk because they could go up.
Oh, for sure, yeah, and there's
Yeah.
a very good chance that they will continue to climb. So this stalling is hopefully it lasts for the next 18 months, and we can just kind of ride this wave. But we'll just have to see. Yeah, we'll see how the Fed reacts to everything. I know that they're kind of angling for a job loss recession. Really, is the Fed's goal right now is to tank the economy. That's what they want to do. They want to cease spending. They want to cease reinvestment. They want businesses to be tightening their belts and laying people off. Because ultimately, that is what stops inflation: is less money being pushed into the market and recirculated. So that's their goal. We are seeing that the job loss numbers are starting to tick up, which is good news. I mean, it's terrible news, honestly, obviously, if you've lost a job. But in terms of what the Fed wants to see, it's what we need to see, unfortunately, to stifle this inflation. So we'll see how things pan out. But again, ultimately, don't miss the opportunity because it may not look this good in 18 months.
Right.
So CNET actually said it really well. They just basically summed up what I was saying here. If you're looking to buy a home, trying to time the market may not be a good play for you. It may not be in your favor. If inflation continues to rise and rates continue to climb, that just translates to higher mortgage payments ultimately. The steeper monthly mortgage payments that you're going to have to deal with are not going to be fun. So as such, you may have better luck locking in your mortgage rate right now, sooner rather than later. No matter when you decide to shop for a home, this is just a good caveat. It's always a good idea to get multiple lenders to give you bids on that. Right now, like I said, they're hurting for loans. They want as many as possible. The refi market is dead, so that's no longer an option that they're not making any money on the refis, so they have to sell these properties. And what they'll do is they'll race to the bottom. You can present fee sheets back and forth and determine who's going to give you the best deal. Just more opportunities for buyers ultimately. But yeah, let's hit a topic away from rates and away from the market itself, and let's dig into something we haven't talked about in a few months, which is new developments in the Austin area. This is always exciting. It's always great to see that the big dogs, the people with a ton of money, are reinvesting in the area. That's always a good sign, especially if you're investing in the area as well. Yeah, we'll take it.
Yeah, so the developer operating out of New York has secured permit changes that allow them to build up to 5 stories in a new residential area, and they're working on that right off Palmer Lane near Samsung.
Yeah, East-ish Austin, Northeast Austin.
And from what I understand, and we need to take a drive out there,
For sure.
but they will be developing other apartments or commercial buildings towards the front of Palmer. And they have a few hundred acres behind that road front that they've sold to KB Homes.
Yeah.
In fact, apparently the KB Home model's already open.
Yes, can't wait to see it. I
So
love Katie.
yeah,
Homes.
definitely maybe worth taking a look at, especially if you work over there, near 3M, Samsung, or one of those other big companies. And here's what the Austin Business Journal said about it. With build-out expected to take 5 years or more, the project is planned to include 2,000 apartments, nearly 500 single-family homes, 3 hotels, more than 500,000 square feet of restaurant and retail space, and more than 1 million square feet of office space, plus 157 acres of parks and around 5 miles of trails.
Yeah.
Crazy.
It's gonna be awesome. I love
it.
the whole park concept.
Me
There's
too.
actually 2 things that I wanted to highlight here. First off, park's awesome. I love my park, so that's gonna be great. And that's a huge park, 157 acres. It's
Yeah,
massive.
great.
But also, if you notice, it said this is gonna take roughly 5 years to build out. That puts us right at 2027. So, what do these guys know that we don't? They know that now's the time to buy, that now's the time to develop, because by the time these are being finished out, they're gonna have made quite a bit of money on this whole situation. So it's just interesting to see that this kind of falls right in line with what Linda had quoted earlier. With the decisions that you're making right now are gonna determine your net worth in 2027.
Yeah.
So it's just something to keep in mind. I didn't even think about it, but I think that's pretty cool. Here's a quick one that I wanted to bring up. Near Manor, so Wild Horse Ranch, or the Pinnacle at Wild Horse Ranch, just secured preliminary, it's in the basic early stages, but they secured preliminary the ability to build 57 new residential lots out near the Manor area. This area has been popping for a while because Elon moved the Gigafactory. It's like 10 minutes south of Manor, so Manor and Del Valle really exploded at that point. They were already doing well, but now they're really popping. So this is good news. It's something to keep an eye on.
And if you haven't been down to Manor lately, their little town square is adorable.
Oh yeah, they're
I
shaping
mean,
up
they're
for
just
sure.
really getting their act together.
Absolutely, yeah, it's a good spot for sure. Fair pricing, you know, great rental returns. If you're an investor, these may be some good opportunities to pick up here too. But yeah, so we'll keep an eye on that for sure. We got one more to end on. This is a fun one. It's kind of out there.
Very cool. So we have a new home builder called Onyx that are saying that they can deliver a residence in 60 days or less, and actually in the Austin market, they're gonna shoot for 30 days or less. It's crazy. They started building properties out in Miami-Dade a few years ago, and they basically placed prefabricated blocks of concrete using an automated crane type system. So using concrete apparently is considerably faster, but it also offers some pretty cool durability. It offers better insulation, and they are zombie proof.
That's the biggie. That's what got me.
Huge.
Yeah,
Huge,
absolutely.
huge.
Throw in some bulletproof windows.
Right.
You got a fortress.
There you go.
You know what I'm saying?
And you know, I admit I was a little bit skeptical, but once I started looking at the products and we started kind of digging in a little bit, it's kind of impressive. So take a look at these pictures.
Yeah, Alex, what were you saying about it earlier?
I thought, surely these homes made of concrete are gonna feel like you're living in a prison cell.
Yeah,
or something.
or like a cellar or something, or I don't know, like
But yeah, I mean, these are impressive.
Yeah, these are
Yeah,
nice.
they look good, right? Yeah, absolutely. I was just as surprised for sure.
Well, the Austin Business Journal said that they're trying to build an operations center in Georgetown. Whoop, whoop.
Yeah, we'll see.
I live in
Hopefully.
Georgetown. First off, that's awesome because we love extra jobs in Georgetown. But in addition to that, I would love to take a look at one of their model homes.
Yeah, absolutely. Well, and again, what's really cool, it just kind of blew my mind to come back to it, is that they're trying to crank these things out in 30 days.
30 days.
They've done the proof of concept out in the Miami-Dade County out in Florida. They've shown that they built 157 homes. I think 157. I might be a little off on that number, but it's 150 something that they built out there, and the average turn time for each home from slab all the way up was 60 days.
60 days.
Yeah, so for them to, I mean, that is astronomically fast. That is crazy fast. But if they can pull that off in 30 days, it's kind of mind blowing.
Wow.
So we'll see. Yeah.
So I'm not overly familiar with property prices in Florida, but I do know that the property pictured here is $500,000. So it sounds a little high, and I know that it won't necessarily be cheaper in the Austin market because we're pretty much in line with Florida pricing. But these homes are going to offer some really unique features because you're not doing that standard stick built home.
Yeah, that's the thing that when we were reading the article that they mentioned, that they were saying that while it is going to be priced at like the average price home either way for the area, because they're saving a bunch of time, typically it takes like 20 something contractors to put together a home from beginning to end, 20 something subcontractors, so a bunch of different companies that have to be coordinated, paid out. They're obviously making profits themselves.
Different types of permitting that
Right.
they install,
And so
the bills.
exactly, it makes it a lot easier to go this route. It's faster. Most of the work is in house too. But the cool thing is that they are saving apparently a lot of money on those factors. And instead of necessarily handing that savings down to us, what they're doing instead is they're incorporating a ton of high-end features.
Right.
So again, I haven't walked the model because I haven't been, I didn't even know they were building this last time I was out in Florida. You're going to Florida soon though, maybe you can go take a look at it while you're out there, yeah.
They look bougie.
Do a video tour, that's the thing, yeah, when you look at the inside, what they said basically is because they're saving time and money, they're dumping that into high-end features.
Right.
So really nice counters, really nice cabinetry, better flooring, etc. So average price homes, but for the price, you may be getting quite a big bang for your buck. And not to mention, you're living in a property that is, quite frankly, it's going to last a lot longer than a stick-built home.
Yeah.
So it's interesting.
Yeah, anyways, something fun. We'll definitely have to keep an
I'm
eye
telling
on.
you, if you
I
go,
can't
I know you're
wait.
going to Florida, you should go take a look at it, man. That'd be sweet. It's in Miami. You're going to Miami,
It's gonna be
right?
a tight
There you
trip,
go.
tight on the timeline, but yeah, maybe
Well, now
I
you
mean,
can
show
write
me
it
some
off.
I was just
locations.
about to
Yeah.
say, go see
Yeah,
model home,
right.
you can write it
Oh,
off.
it's already a business trip.
Yeah,
There you
fair
go.
enough, fair
Record.
enough. Cool. Yeah, so I mean that's basically all we got for you guys today. Moral of the story, it looks like we're getting close to the end of this craziness. We're expecting a continued recession through 2023, but we have stalling mortgage rates and stalling prices, which is basically what we've been waiting to see, so that's always exciting. It indicates that we're getting back to our cruising altitude. Quite frankly, if you're a buyer, the world is your oyster. Time to make a move right now. And if you're a seller, it's not all doom and gloom. If you're staging your property right, if you're hiring excellent realtors like ourselves to make sure that that property is being marketed, because marketing is a huge deal right now. You can't just throw a property on Zillow and it sells a day later. That's no longer the world we live in. Marketing is very important. But yeah, willingness to negotiate, prepping your home for market, and then having a realtor who knows what the heck they're doing and can market the heck out of that home, all very important factors here. So yeah, as always though, we are here, whether you are just have any questions about the marketplace, if you have a property you're thinking about selling, if you're a buyer, and if you just want to in general strategize about how you can make a play in this market, that's what we're here for. So yeah, we look forward to chatting with you. Feel free to message us. We'll be on standby. See you guys.
Bye.